All right. So before we look at some of the deeper aspects and just a few of the examples of the full cycle that we discussed, I want to primarily take a second to focus on these three things in a reference to what I discussed a second ago. And then we're going to look at real examples in reference to what we've already done as examples before. So when I talk about this kind of orange area that I kind of circled here, so this orange area here being a hybrid, what I mean is that the way in which a trend may deliver for any given market is going to go through a few different potential ways within which it might deliver, right? This 1, 2, 3 is a good example of like some of the ways that a trend may actually fail or actually end up delivering. But what people tend to do is they conflate the cycles in a market or the potential move of a market with something that has to be very stringent. People think, it has to be in a higher high, higher low basis perfectly. It has to be a perfect fit retracement. It has to be a perfect insert, whatever. It's complete nonsense. That's not how markets work. And each market is going to move a little bit individually. So this is where I want to introduce you to, and you're going to hear from this a lot more, what I call the Snowflake rule in trading before we go on any deeper. So the Snowflake rule in trading and in basically the MetaFX methodology, and this is what I've always taught from the very beginning, is that the markets, in terms of the cycles, in terms of the setups, are snowflake-based moves. What I mean by that is individually, when you go outside into the open air and it's winter and snow is falling, right? No matter what lands on you, no matter which snowflake lands on you, you look at that and you go, yes, this is snow, right? No shit. This is snow coming from the top, from the clouds. This is snow falling on me. However, as a lot of you may know, or if you don't know, this is a little bit of trivia for you. If you put these microscopic snowflakes under an actual microscope, what you'll find is that they all are made up, and the pattern that they have is very, very different. So they're all intricate. They all have very unique patterns of the way they're constructed with the water or whatever, because, well, that's how they're fundamentally made. So similarly in trading, this is where the snowflake rule appears very, very heavily, where on average, based on what you've learned, each move is going to fundamentally, that's a good move, is going to fundamentally follow the stage 1 and 2 base delivery and do so in a relatively clear way. And you'll know what's going on because it's going through accumulation, reaccumulation over and over and over again. Similarly, every good move that truly starts is likely going to start with some kind of cycle that is going to be met with that flush out, the anticipation of the higher low, so the overall accumulation, the stage 2s, the new flushes, stage 1, stage 2, stage 1, stage 2s, and a myriad or a hybrid of all of this happening. So again, a hybrid simply means that it could be a mix of these things occurring back to back to back to back. So similarly, in any given move that's going to occur, the move itself is a snowflake. We're aware of what's happening. We're aware of the move that's happening. It's just that the move may happen and may deliver in a little bit of a different way. So even though we know it's accumulation, even though we know it's stage 1s and stage 2s, even though we know the general rules that should be met, even though we know how the MBs should technically form, the way in which the market actually ends up delivering, the way in which the orders that are coming into the market actually get accumulated, create MBs, or refail back down, create new MBs, or flush out, become new MBs. So for instance, imagine a market, right? The way a market goes and then flushes out and starts making a potential, but then fails deeper, makes a deeper stage 1, starts going, but then makes a deeper pull back that ends up being the stage 2 into a larger stage 1, that then ends up giving the MBs for a given move, and then a move might start to make a stage 2, but then the next stage 1 actually takes you out. And the next stage 1 puts in the cycle with the anticipation of a higher low rule for a new accumulation and starts new MB pushes that become new stage 1s into 2s, stage 1s into maybe very nice MBs that start a move that go into stage 2s, minor stage 1, stage 2s, minor stage 1, stage 2s, and then finally fail down and then go awry and go crazy. In this scenario here, you still followed the blueprint or the cycle of what is meant to happen in an overall trend or in an overall move. You still had the development, even though it might have taken a little bit more time or the way that it might have delivered is a little bit different. You still had the development of overall flush outs that led to anticipation of the higher low rules, which led to accumulations because that's all the same thing. So anticipation of the higher low rule, As it happens, and then orders start to stagnate or orders start to get accumulated, it's led to an overall, we call an accumulation. Prices may start MB buildups, and those MB buildups might not give you entries, but instead they might create new stages that create new stages that give you entries, that create new stages that create entries that truly validate demand and begin to make a move. So again, this simple example, even right here, it functions as a number of things. One, it functions as this snowflake rule right here, where again, the move is consistent with what we understand about trends, but the way in which that it will deliver might be a little bit unique, a little bit of a hybrid of the stuff you see here in one way or another. It might be, the MBs that form might be a little bit different to what you might be used to. The stage ones and stage twos in regards to how they're forming might be a little bit different than what you're used to. The way the indicator looks that you have enabled on your charts might be looking a little bit different than you might be used to. This is normal because it's the snowflake rule. And similarly, another thing that this should help you do is when you look at this here, what it's going to also do for you is it's going to likely show you where you've gone wrong before and why you've gone wrong before, right? Because it's very likely when you look at this, you start realizing that, hey, on average, this is what I tend to see markets do, right? If I take a step back and zoom out and think about the times that I've lost in the past, or the things you were confused about in the past, this might be just the way that a market tended to deliver. And you might have been stuck on the wrong side, constantly confused about what's going on or why it's doing something. Whereas now you have a new lens from which you can apply to what you're doing, which is the snowflake lens. Understanding, again, we're going to go through examples in a second, but overall, I want to introduce this rule so it's really remembered in your mind, because I've spoken time and time again about the fact that as traders, the things we do and the things you're doing for yourself is tailoring a system to what's going to make you money, which means that there are going to be differences between traders, but there's going to be similarity in regards to what we're actually looking for and what we're trying to accomplish. So the snowflake rule is very important. And then once you get this, you start realizing why this right here is just another snowflake representation of, let's say, a cycle like this one, right? So it's a simpler way to understand that the markets are not meant to be exactly perfect. Think back to the other rules of demand validation, and all the other stuff that came with it. Sorry, I'm doing something else right now, but think back to demand validation, think back to stages, think back to the anticipation of the higher low rule. Every single thing we've done is a general blueprint of the market, not a guaranteed perfection-based fact. And the second you start realizing this, the faster you're going to start finding profitability, because then your mind moves more towards understanding the underlying snowflake, understanding what's going on so you can trade it, understanding what the composite operator is doing so you can get involved with it, rather than sitting there looking for that specific and perfect pattern. Okay, so this is kind of that intermediary video before we look at more examples, just to get this more solidified, and before we talk about more about this full cycle, where I wanted to draw your attention to this stuff right here, where each one of them kind of represent the same thing, with the exception maybe of the number 3, because in 3, we actually fully fail before creating a trending-based move. But when we look at this, you start realizing that a lot of the markets that you've probably traded and the areas you've gone wrong have probably moved just as beautifully as this, where you could have been able to trade it and done very, very well for yourself. But it just so happened to be the case that you didn't have or weren't equipped with the proper tools, right? So this is the snowflake rule. So just keep that in mind. The snowflake rule is simply that the things that happen in the market are consistent. They are repetitive. The trends that start and the way the trends deliver is the same thing every single time. It's still accumulation. It's still stage ones and stage twos. It's still perfect delivery. The only difference is that it's not always perfect, and it's unique in the way that it's going to do it. And it's unique to the asset you're watching, to the time frame you're watching, and over enough time, it's unique to each individual moment. But as a trader, when you have an edge and you've built an understanding to the market, not just patterns, all of a sudden, you have the ability to execute the pattern you have within a story, because we're learning how to formulate story. So then, well, you can see that edge through and make money. Okay, I'll see you in the next one.